This is Joe Mazumdar of Exploration Insights. You can see the backdrop there. At the Metals Investment Forum, the first one of 2024 in Vancouver, but we're doing this virtually today with Cal Everett, CEO of Liberty Gold, as he's planning on a big marketing campaign as he takes on the CEO role again at this development gold play in southern Idaho. So Cal, how's it going?
Going well and hard work, but it's back in the seat again.
Well, we're happy to see you back. And just for people to get a background again on Liberty Gold, we're talking in the basin, but we're talking, southern Idaho. Right now, Liberty's Black Pine project, it has another project, but let's focus on Black Pine. Over 3 million ounces of a half a gram of what we'll call open pit heap leachable material there, 84% indicated. And that was from the resource from last year. How much have you done in terms of drilling, and what has your focus been on coming up to your next big catalyst, which is the next resource update coming up in the first quarter of 2020?
There's a few moving pieces here, because last year I was a director of the company and I wasn't managing the company. And so the drilling from last year was approximately 30-odd thousand meters, but that was infilling within the resource blocks. So you might have a high-grade hole, but you had to drill on 30 to 50 meter centers around it, even if you were going to get 0.1s or 0.2 gram material. That would bring your average grade of your deposit down, but you needed that to convert your inferred ounces to M&I, and then that new resource, which is in process right now, and it's almost done, would then go into the PFS, and then you can complete your PFS and hopefully get that PFS done by July or August of this year. So It's coming fast, okay? And so when I was analyzing everything before I came back in, I think that we went after an economic study, and last year was not a good year for people on buying economic studies, whether they were good or bad.
Yep.
They fell on deaf ears. And so I think we may have disenfranchised our shareholder base, the people who just wanted to see a tier 1 5 million ounce plus deposit. And so this year, what we're planning on doing is getting through the two ugliest words on the market, the Lassonde curve, and get the PFS out, and then go towards full feasibility, get that new resource update, get projected economics to the market at the same time with new permits that are pending. We've got 7 major new targets to drill, and the new permitted area would show the entire, in plan view, size of the Black Pine drill target area. Now goes just slightly over 40 square kilometers. And we've never drilled a hole on that property that doesn't have measurable gold in it at some level. It might be ore, it might be waste. But there's always detectable gold in every single hole, and we've now drilled over 1,000 holes.
Whoa.
Okay, that's a lot. That's a lot of drilling, but that's what it takes when you have to go into a bulk tonnage, Carlin-style sedimentary hosted gold system, right? You can't do it like a porphyry on 100 meter centers.
So with the PFS, are you going to in parallel drill some of these grassroots targets?
Well, as soon as we get the permit, which is now told is probably going to be in June, and then we'll look to turn the drills on, and then take on these targets. And just for the record, we've got holes in a few of these targets. Right? And if you look at the tape session later on, we're going to show the maps of where that new plan of operations application is, where the new 7 target areas are. There'll be cross sections, there'll be everything in there.
Okay. And from what I understand, when you've been drilling to indicated, I think the goal is to push as much as you can over 3 million ounces into the indicated category for the PFS. Is that correct?
It's all PFS driven, yeah. But we've had 3 plan of operations that we've already got and we've been drilling in. All 3 of them have not been drilled out. We drill a hole into rangefront and we get 1.5 grams over 60 or 70 meters. And then by the time we drill it out in one season with a couple machines, there's 850,000 really good grade, highly leachable ounces sitting there, right? And that just is building mine life. So ultimately, the target is to get a minimum 15-year mine life and have enough near surface and deeper material that you can stage out your production schedule, so you can average those ounces out and try to make them equivalent. You don't want a 50,000 ounce year and a 300,000 ounce year, right? You just don't. And you want to extend mine life. And I find in discussions I have with companies that are following Liberty is that they're right now, they're not necessarily focused on grade or anything like that. They're focused on mine life.
Right. But I mean, the other thing is with respect to a payback, some of the emphasis was on some of these zones that offered higher grade, better recoveries to get a like within 2 or 3 year payback. Is that's still the focus of the PFS and drilling?
That is it. Yeah, that is absolutely it. But you know, it's the mines. You've been there, haven't you? I think you have.
Oh, yeah.
And you know how big it is. It's massive. And so when you find one of those high grade feeder structures, and let's say it runs 2 grams of gold over 60 meters, that's payback rock, because it's going to cost you the same amount of money to move that ton as a ton that runs 0.2, right? But you still wouldn't throw the 0.2 in the waste dump, because if it costs you, say, $2 to move it to the waste dump, but you can get 25 cents back on the heap leach pad, it really only costs you 175 to move it. So you have to maximize your economics.
Right. And you know, the goal is, in the end, is to come up with something that's already operating, that's owned by an intermediate gold producer, SSR Mining, called Maragold, which has produced around 4 million ounces over its life. I mean, it's still producing about a half a gram, and it gets run of mine. And this is important. It's run of mine. There's no crushing, and it's getting on average over 70% recovery. That's sort of the goal here.
Yeah, we follow them closely because we talk to them, and they're at 72% with a 0.47 gram average grade. And the mine's been operating for around 33, 34 years.
Yeah.
Right?
And their all-in sustaining costs about $1,400, but what people don't maybe know is that they're dealing with about a 3.7 to 10% NSR on their project, whereas you've got like a half.
Well, well, we can buy it back now to 0.25%, right?
Yeah.
And if I wanted to sell an NSR, I could do it, because internally we think we can handle a bigger NSR, because if we wanted extra capital or whatever. But at this point, I'd rather protect the economics.
Yeah. And then the other issue, like we know about, you know, the States all the way down to South America, is the water issue, about mines competing for water and getting access to water. And one of the beauties about this project is you do have water rights.
Yeah, we secured our water rights, I'm going to say 2 or 3 years ago, for 100% of the mining operation and with the surplus.
Yeah. When you say 100% of the mining operation, like what's it? Maragold's like a 65 to 70,000 ton per day operation. What are you thinking?
Oh, the numbers keep changing, and as soon as you adapt a different cutoff grade, you know as well that the engineering firms are going to change like, as long as we've got the heap leach space. We're looking at heap leach space now that we've identified, but the problem is we drill in underneath of those, one of the big heap leach target areas, and there's freaking gold in it.
Yeah.
Right. So you got to move all these pieces are like a jigsaw puzzle. They all move around, and so. It could be 20,000 tons a day. It could be 50. It could be 80. Who knows? It's just, you don't know what the ultimate scale is, and that changes your economics, right? Because if you're going to do 65,000 tons a day at Maragold, you know exactly what their cost is. And some of the early profitability at Maragold was their ability to use those big scoops, right? Move massive tonnages, and it cost them around $1.65 a ton to mine it, to strip it, mine it, and dump it on the heap leach pads. And that's what their cost was. And that was where the profitability really came from, their ability to move rocks cheaper than anybody else.
Right. Maragold, for people that don't know, is what Hycroft wants to be and never will be. The other thing is social license to operate in this area of southern Idaho. How is that going?
What, on social license?
Yeah.
Oh, we've got tremendous association with the local communities. There's only, I think, one lady who lives anywhere close to the mine, site. And we've talked to the local communities. We do reach outs. We sponsor people there, all that kind of stuff that we're dealing with. But remember, this is a unique property because it's got no flowing water.
Yeah.
There's a massive amount of water below the deposit. So even if you mined it, you'd have no pit lakes, you'd have no fish. There's no forest. The forest was burnt down in 2005 or some year like that. and there's power to the mine gate. All these things are ticking boxes that you don't have to pay for later.
Yeah, yeah.
But the key was first out of the gate, and that was our people in Utah who were pushing it. We think we can secure the water early. And then you've seen what's happened with water searches around the world since
Oh
then.
yeah, yeah, yeah. Oh, and even communities, not even mines.
Yeah, yeah.
So we run out of time, but I mean, well, as you get to this stage of a project, de-risking, even though retail is not, in love with the idea of de-risking events and paying for de-risking, I would say, your de-risking is not only the permitting, the water seems to be taken care of. Metallurgy, you've got very advanced stage metallurgy, but you just need to do more advanced stage in some of these new, like in Rangefront and that, versus the
We've
discovery.
already done some on that, and I haven't seen the numbers on that yet. But when we get them, we'll put them out. But we know we get cyanide solubilities on all holes. It takes time to get it, so we know if it's going to leach or not.
Okay.
So we already know out of the gate if it's going to leach. And so all that's being done, but we're going to be submitting a plan of operations this year, looking for a 2027 construction date.
Oh, wow. Okay.
That's new.
All right.
Because our COO, John Gilligan, and he's the president of the company, he's really advanced things to a point where he's spending a lot of money, but he's moving it faster to speed up the timeline, right? You don't want it stretched way out. And we've done, there's no endangered species. We're tagging mule deer in the area. We don't even have to do it. In case somebody says, what are the mule deer doing? Oh, this is what they did. We did it 4 years ago.
Yeah.
Right. And we tag them by helicopter and they go bouncing through the countryside occasionally.
Oh, I had a hard time imagining you running around and saying it.
I'm just not going to happen.
So lastly, I mean, okay, there's a lot of things that make this very exciting, but obviously you had to do this little royalty deal with Wheaton that brought in a private placement from the royalty guy. To get an option potentially on getting the royalty on the 0.5%, but which you get a 0.25% buyback. What does the financing of this plan look like right now? Are you fully funded for this plan?
For the new plan, well, we're sitting at about 11.6 million US dollars now in the treasury, and our real burn rate doesn't really accelerate for another 2 or 3 months. And so at some point later on this year, we're going to have to raise money, but I'm dealing with the monetization of the TV tower project in Turkey.
Yeah.
And we're finally getting reception there. And but whether we take a number that's in front of us, we'll what the way it's like to negotiate in that country.
Okay.
And
Is there any room for like other divestitures like of your other property there that's advanced?
oh, Goldstrike?
Goldstrike.
Well, it's something I look at, and our business development group looks at as well. And the question is, if you're not going to get paid, if somebody's only willing to pay for black pine, you may want to dividend out to another company that wants, a couple 50, 75,000 ounce producers and start again.
Right.
And create a stock dividend in order to get more value out of the assets in the company. Because if you take over a public company, I'm just using this as an example. Let's say the market cap is 150, $200 million. Okay. But if you divest an asset for 50 million, the purchaser is only paying 150. If you move an asset in another political jurisdiction for 15 or 20 million, the cost base is 130. And then whatever cash is in your treasury, they take that and that nets out of it in the end. And that's what they're really paying for black pine in this example, right? I'm not giving those are not exact numbers. I'm just making it up.
Yeah.
But that's the way you have to look at it when you're trying to do this. And you've got to hit the market when the market's right. Because we've done very few financings over the last 6 years.
Yeah.
We sold $30-40 million worth of US dollars worth of secondary assets. And then we've paid $1 million to get black pine, and then $1 million just turned into today's market cap of 100 and some million.
Right.
Is that you have to, and that stops the dilution of your share price.
Well, let's end it there. But I really appreciate the update. I look forward to seeing the presentation, and all the best for your marketing round. And we hope to see you also at the PDAC MIF coming up in March. So
I'll be there. Yeah, I'll be there.
Okay. Well, that's it for me. Joe Mazumdar, Exploration Insights at the January Metals Investment Forum in Vancouver. Thank you very much, Cal. Everett, the CEO of Liberty Gold.